My name is John. Thanks for joining me here at Honest Patina. Today is February 6th, 2021, and we're going to discuss what it takes to invest ahead of the herd. Sometimes the most obvious investments are right in front of us. I can remember back in the 2008 to 2012 era, sitting in my parents' house, watching Netflix and Hulu for the first time, using Amazon, Facebook, Apple products, all in their infancy. Many of these companies had been around for quite some time before that, with the exception of Facebook. But had you taken the step to make the investment, where would you be today? How would your financial health be? So, we're going to take a look at a video, some statistics, and a couple of articles, and try to figure out what it takes to be one step ahead of everybody else. Alright, so we're not going to watch this video in its entirety, but it was produced in 1974. It was hosted on YouTube in 2013 by ABC. What I want to draw from the clip in this video that I'm about to show you is the mindset that this gentleman has. If we can think like this, it'll make investing much easier. We can look at products, services, various companies, ideas, leaders, and determine what we may see next.
2001 is that he will have in his own house, not a computer as big as this, but at least a console to which he can talk to his friendly local computer and get all the information he needs for his everyday life, his bank statements, his theater reservations, all the information you need in the course of living in a complex modern society. This will be in a compact form in his own house. He'll have a television screen like these here, and the keyboard, and he'll talk to the computer and get information from it, and he'll take it as much for granted as we take the telephone.
I wonder though, what sort of a life would it be?
So if you caught that there at the end, he mentioned that we would take the computer as much for granted as they did the telephone. If only this guy knew what was on the way. So the next thing that I wanted to look at was the Google Play top free apps. Some of these companies are publicly traded. But one thing that you'll notice, at least of the top two rows here, the majority of them are finance related. Of course, we have Zoom communication, which has become a big thing with the virus. Something that the gentleman in this video didn't quite allude to, but in some ways he did. We can see Robinhood, Cash App, Google Pay, PayPal, Coinbase. The first four here are traditional fiat-based investment or payment platforms. So clearly, finance has been a strong focus for Android users in recent times. So we have this article here, which actually talks about one of the applications that were mentioned on this previous page here, Robinhood, something that's been in the news quite a lot in regards to Wall Street bets and the activity that's going on that subreddit. But I wanted to point this out. I thought that this article was somewhat unfair, but it also gives us some insight into a way that we could think about investment. This article is from Yahoo Finance, written by Justina Lee and Brandon Kokeden. Robinhood traders have a troubled track record of stock picking. How unfortunate. It may be true, but I think it's a generalization. I think that there are a number of people that use Robinhood that have great performance. So if we scroll through, one of the primary focus of this article is the Wall Street bets and the activity that goes on in the subreddit. The philosophy behind most of the investors on there they are chasing momentum. They would like to YOLO away their entire savings in order to 10x the amount of cash that they've put into that specific stock for life-changing wealth. And in most cases, there's a significant loss. In some cases, these investors do have success. The article says here, picking stocks is hard. Almost nobody has an edge, and it's no mark of shame when a call fails to pan out. Yeah, indeed, picking stocks is challenging. How can we be ahead of the game? How can we determine what the next big stock is? And I agree, nobody has an edge. Unless you're a whale, then you have the money to be able to make the large investments and potentially influence the market. It is these cautionary tales on stock picking that are documented in research covering this area of Wall Street bets. A new paper finds that on average, when retail traders on Robinhood markets buy a stock, it doesn't perform better over the next 3 to 20 days. What this is telling us is the stocks that are trending on Robinhood are things that we should potentially stay away from. Now, in some circumstances, the stocks that may be getting a lot of attention are something that you've already invested in, and in that case, could be a good thing for you. But we shouldn't follow hype. If you're early to the hype, it makes sense. You may be able to ride that momentum wave. Otherwise, you shouldn't get involved with that. And I'm explaining this from the mistakes that I've learned with Bitcoin in late 2017, early 2018. I was trying to follow the hype when in fact the majority of bag holders had already made their investment and their wealth was increasing. I was helping them. I was at the end of that. We don't want to be at the end. We want to be at the beginning. The article goes on to say, Robinhood investors' evident lack of skill in aggregate is consistent with commission-free investors behaving as uninformed noise traders. You know, this is unfortunate. I don't think Robinhood investors are purely noise traders. I do think that there is a large set of the community that trades on Robinhood that do follow these groups of stock that have a lot of hype that may be mentioned on Wall Street Bets. But I think there are a fair share of Robinhood investors that also focus on something that's a little bit more stable, like an ETF. In fact, I think because there are commission-free trades, there's a whole new wave of investors that would have been afraid of getting invested in the stock market years ago when it was much more expensive to trade. While the evident lack of skill is apparent now, the mistakes that investors are making today, they will learn from and they will improve their skill set. This is something that I wish this article had addressed. Unfortunately, they are only speaking based on what they're witnessing currently rather than thinking ahead. Again, that's the point of this video. We're trying to learn to think ahead. The authors also found that the stock, with buzz on Wall Street Bets, see a spike in activity on Robinhood a few days later, a sign there's likely much overlap between the two communities. Absolutely possible, but if you go and read the Wall Street subreddit, you'll find that after recent events with Robinhood, a lot of people are changing their brokerage. I wonder what that's going to do to the Robinhood community. Will it remain? Are those people on Wall Street Bets lying about the fact that they are going to move their account elsewhere? Will this shake out some of the Robinhood investors that are momentum traders, that potentially lack the skill, as this article likes to say? All right, moving on to this next article. This is represented on Cointelegraph, The Future of Money. It's written by Jordan Finseth. Whales profit as high Ethereum gas fees sideline retail DeFi investors. So the reason why I'm jumping from stocks to cryptocurrency is because these are two interests of mine, and I find that there is some correlation between the communities that we're seeing on Robinhood, Wall Street Bets, and in the crypto space. So I think it's worthwhile looking into these types of articles as well and seeing how they impact retail investors versus institutional investors, which is what this article is going to discuss. So the article says, high gas fees on the Ethereum network are making it nearly impossible for retail investors to interact with DeFi protocols, but the same doesn't apply to the whales. Just for clarification, DeFi, short for decentralized finance, is an opportunity to use an exchange that's not hosted by a centralized party. So the decentralized finance sector is cutting edge. It offers lucrative high-yield opportunities to all of the cryptocurrency holders. The unfortunate part is currently, since there's so much activity on the Ethereum network, ERC20 tokens make up the majority of altcoins or coins that are not Bitcoin. And because there's so much activity on the Ethereum network, and there's an absence of a suitable layer 2 solution, we're finding that the gas prices are incredibly expensive. Gas is what you pay to interact with a smart contract. And this smart contract, for example, on a decentralized exchange, allows you to swap between various tokens, and those tokens have different use cases. Investors attempting to place a trade on Uniswap or simply approve a new token on their favorite DeFi platform will have noticed the dent these actions have put on their ETH wallet. I have attempted to make a trade on Uniswap and found that the Ethereum gas prices are extremely high. It's unfair to a small investor who may be only trying to buy 1 or 2 tokens of something that's very cheap. The article goes on to say, the rise in gas fees also coincides with the surge in the Ether price. This shows that the fees are a factor of network usage and highlights the 24-hour nature of the cryptocurrency market. There is one group, however, that has benefited from the sharp increase in network fees brought on by the rise of DeFi, whale token holders. Okay, if we think about this from the perspective of trying to be ahead of the market, how could we have taken advantage of something like this? Well, we can't go back and change history, but I find that this article is very consistent with what we were seeing in this article, talking about Robinhood traders. We want to be ahead of the curve. We don't have to be a whale to take advantage of this. We just have to be an early investor. This brings me to Elon Musk. I mean, this man is always talking about Dogecoin. Look at this tweet that came out 21 hours ago. The future currency of Earth. Dogecoin to the moon, all other crypto combined. He doesn't even mention Bitcoin. It wasn't but a week ago that he had the hashtag Bitcoin in his Twitter bio. I'm not sure what his fascination is with Dogecoin, but I have thought about potentially just holding a little bit of Dogecoin in the event that it spikes, and it has spiked a number of times over the past week. That being said, I'd rather put my money in something that I truly believe in, that I think has the potential to continue forward. At some point in time, this meme coin probably won't have as much of an impact after Elon Musk does this several more times. But notice, his primary focus, everything that he's advertising on his page, has to do with space, planets, rockets, children. So we should certainly look at space as an opportunity. Less than a month ago, Cathie Wood from ARK Invest talked about creating a space exploration ETF. All of our other ETFs are incredibly successful. This isn't something worth ignoring. So where is she going with space exploration? There is a comment on the website, which reads, seeks to provide exposure to companies involved in space-related businesses like reusable rockets, satellites, drones, and other orbital and suborbital aircrafts. These innovations should transform logistics, observation, agriculture, telecom, drones, and may even put humans on Mars. You as an investor have to consider these categories. Find companies that align with these keywords. Try investing in them. And also try getting a little bit of cryptocurrency. Can you imagine what it's going to be like when they're able to confirm blockchain confirmations for Bitcoin between planets? Is it possible? I'll leave that up to you to think about. Catch me next time on Honest Patina. Thanks for joining me. Hope you enjoyed this video.